Capitalism is the most widely adopted economic system in the world. However, there is a lot of division over what the future of our economy should look like and how that is going to compare with capitalism. In this video, I'm going to define the most important characteristics of capitalism, the problem with two distinct parts of capitalism, and some of the ideas that could help with resolving those problems. The term capitalism emerged in the mid 19th century. It can be described as an economic system with private ownership of assets and the means of production. Profit-driven production with capital accumulation and wage labor, with resource allocation that is coordinated primarily by competitive markets and prices. This all happens under a legal framework that enforces property and contract rights. We're going to focus on two important areas that are related to capitalism: free markets and companies that are limited by shares. Let's start with free markets. A free market is an economic system in which the allocation of goods, services, and resources is coordinated primarily through voluntary exchange. Prices are set by supply and demand, with minimal central planning and intervention. With free markets, you generally expect to see multiple buyers and sellers that compete against one another. This competition helps to encourage innovation and quality improvements in an attempt to capture more of the market. Decisions around what gets produced is decentralized across individuals and companies. These individuals and companies will decide themselves what they will produce, how they will produce it, and who they are producing it for. The great thing with free markets is how effective they can be for encouraging innovation and entrepreneurship. A competitive market can help with increasing variety, quality, and enabling more consumer choice. Free markets can also create an environment that is capable of handling rapid changes, and that can be due to things like changing consumer preferences or technology. The decentralized decision making can also be a great way to solve problems, as with a free market, a number of people can solve a problem in their own different way, and then the market will decide which solution is best. Free markets do have their benefits, but they are far from perfect. Without any regulation, free markets don't handle the problem of externalities. A company could keep creating products that pollute the environment, and this growing cost to society would keep happening, potentially at an industrial scale, if there weren't any interventions. A tax might be necessary to reduce or remove these negative externalities. A tax could then be used to pay for the costs involved in preventing or reducing these negative outcomes. Free markets are also not very effective for providing public goods, like national defense or funding public spaces, parks, research, or the creation of open standards. Free markets can also easily lead to the overuse of natural resources, like from fisheries, woodlands, or groundwater, as just a couple of examples. Both natural monopolies and network effect-based monopolies can also emerge in a free market. That can include things like utilities or digital platforms, such as social media networks or marketplaces. So, in practice, markets are rarely perfectly free. In reality, you need to prevent and correct these different issues that can occur. This is often done using regulations and intervention. If I look around at how we're currently managing natural resources across the world and what's happening to our environment and biodiversity, it's not very convincing that we want to make markets more free than they are now. It seems more likely that what we actually want is stronger regulations and interventions to properly protect our resources and the environment. Certain natural assets take a lot of time to replenish, and some resources, like natural gas and oil, will eventually run out, so we do need to replace them with something else. Stronger regulations and more state intervention is just one solution. However, another potential solution is to avoid free markets entirely and create something like a resource-based economy. A resource-based economy would be an economic system that allocates goods and services based on measured resource availability and human need, without the use of money, prices, or profit. A potential enhancement of this idea could be a cybernetic resource-based economy. Cybernetics is the science of communications and automatic control systems in both machines and living things. So, a cybernetic resource economy would be one that is based upon feedback, communication, and control, using real-time data to then adapt production and distribution based on achieving certain goals. One popular activist movement that is an advocate for a more resource-based economy is from the Zeitgeist movement. And an example of an economic ideology to consider that is also advocates for the replacement of markets is participatory economics, which advocates for democratic planning to manage the economy and resources. I'll add a couple of links for both of these initiatives in the description. Free markets clearly have some problems. Markets are in need of stronger regulations and state intervention if you want to provide public goods and to prevent monopolies or overuse of natural resources that can lead to the ongoing degradation of our environment. It seems likely that over time, only parts of the existing market might be considered somewhat free, and the rest of the market becomes increasingly regulated or even controlled and managed by automated solutions. Or we just have to accept the ongoing collapse of our environment and biodiversity. Hopefully we don't do that. Let's now move on to talking about companies that are limited by shares. One of the early and more famous joint stock companies you may have heard of is the Dutch East India Company, which was established in 1602. The joint stock company structure utilizes shares of ownership, and this ownership structure made it possible for many people to invest in a company and then receive a return on investment in the future if the company succeeded. Investors would receive shares of ownership for their financial investments, and these shares lasted in perpetuity. Since that time, a huge number of companies have been founded that adopt this same type of share-based ownership structure. Companies that are limited by shares are currently one of the most popular ownership structures for companies worldwide. In a previous video, I've already went through the problems with organizations and this ownership structure in more detail. And that issue was that perpetual shares of ownership never lapse or expire. When shares last in perpetuity, it means shareholders can be compensated for decades or even hundreds of years without needing to contribute anything else to the company. What may have been a form of earned income in the beginning turns into unearned income over time, when the compensation they receive can eventually become excessive. Another problem with shares of ownership that never lapse or expire is that they generally have governance rights. This means shareholders will have governance influence over the company for decades or even hundreds of years. So governance can easily become stagnant due to the persistent control of people that historically received most of the shares. A final thing to mention is there is no mandate for every contribution to be treated equally. This means in company structures that are limited by shares, it can be common to see a class distinction of owners and workers. Owners that have shares and workers that do not. This can mean workers have no governance influence in the organization and no compensation rights to benefit from the growth and success of the company. The solution to this problem is to ensure that shares eventually expire and lapse. Shares of ownership should be temporary. As well as this, all workers should receive shares of ownership for contributing towards the organization. An existing solution that is already being adopted right now is worker cooperatives. In these organizations, shares are redeemed when a worker leaves the cooperative. This means shares aren't given to someone in perpetuity. Only active contributors would be involved with governing the organization. The historical economic period of capitalism has provided a number of benefits for society. We've certainly seen a lot of innovation and progress, but there are clearly a number of serious flaws with this economic system. Free markets are problematic. They need to be better regulated or even replaced in certain areas to properly protect our environment and also to prevent things like monopolies. Companies that are limited by shares also need to replace the usage of perpetual shares of ownership with temporary shares of ownership. Contributions don't need to be rewarded or have governance rights in perpetuity. Worker cooperatives are one of the solutions to this problem. Capitalism isn't going to fix the economy. Instead, the entire economic system is going to evolve. Society is now moving towards new ideas for how to structure and operate our different economic systems. Land value taxes, deflationary demerge money, temporary shares of ownership, and completely new governance systems. There's a lot of systems that we need to fix. What we end up calling this new economic system, well, we'll just have to wait and see.